Let's talk to Clive Lambert. He is a director of FuturesTechs. Very good morning to you, Clive.
Hello, Nick.
Right, let's take a look at the currency markets. 4 thought-provoking slides, hopefully. Let's kick off with the first one, the dollar index on a daily Japanese candlestick. What are your observations?
Observations are we are at resistance, and it's not the first time. Well, obviously that's what makes resistance. Back in August, mid-August, 96.86 is where this topped out. Then we pulled right back to 93 handle, then rallied, and at the end of October we printed 96.98 and then fell over again. But the lows are getting higher, and we've rallied again this week after the Fed, and now very soon we're going to be retesting that 96.98 level, and above there there's a Fibonacci resistance target 97.83, and then I guess we can look for the big fat round 100 level for that, because we'll be above that October high. We'll be at levels for the US dollar, the dollar index, that we haven't seen since June 2017.
Well, it's quite extraordinary. A number of commentators have come on this week, all right, and said they were expecting dollar weakness between now and sort of Christmas. From the technical perspective, that does not look like a weak chart to me.
Absolutely not. I mean, if anything, really, it's just a sideways chart and has been for since May.
Yep.
But we are, but there is, it looks bullish to me, and I wouldn't be getting in the way of that one.
Understood. Okay, let's move on to euro dollar on a weekly chart. What are your thoughts here?
Well, because if we are going to see further gains in the US dollar, then that conversely says that we're going to see weakness in the euro US dollar as a pair. And looking at that chart, we have a similar situation, but we just flip everything on its head. 113 is a massive level. It's a key level, and the first test of that level, the first retest of that level last week, we held it, we posted a doji, and then we tried to go up, but 115 capped upside earlier in the week, and we're back having a look at 113. And if we break 113, there's a Fibonacci level at 111.87, and if we break that, the next support of any real note is around the sort of 108 handle. So we've got some key levels that we're sitting just above right now on that one, and it could be a big move on the offing if and when we break 113.
Okay, let's move on to cable. The Great British Pound against the US dollar on the weekly. A pretty tricky currency pair. What are your thoughts?
I don't know why I'm trying to look at charts for anything with sterling in it right now. But that's actually why. That's why I'm looking at the weekly. Okay, because I'm happy to do that. I think it's very difficult to look at this technically right now with Brexit headlines left, right and centre and nobody knowing really what's going on. But obviously, if you take a step back and look at the weekly chart, then there's things on there that we should be aware of. And actually, it's done a lot better against the US dollar in the last few weeks than the euro has. And we're just stuck between a couple of Fibonacci levels there at the moment. This is a nice chart to illustrate that these Fibonacci can and does work, because 126 to 126.60 is a big area of support, and 132.75, 133 is a big area of resistance. We're stuck bang in the middle of those at the moment, in the middle of those Fibonacci levels, and this is a while away from that situation we've got in the euro against the US dollar. It's where we're sitting on key support. This is in the middle at the moment, and is looking fairly set fair, if you like.
Well, you would be equally right, I think, at this stage to buy calls as you would to be buying puts. So let's turn our attention now to the last chart, the euro Great British Pound. Obviously, this is a Brexit shout. What are your thoughts?
Yeah, well, exactly. So, I mean, if we are talking about what the direction of sterling, maybe this is the better chart to look at it at. Look at, because it's against the euro. They're the two pairs involved in this whole process. And this chart, again, we've looked at the weekly to take that step back. It says that there's a huge amount of support around the 86.80 to 87.10 area. But if that breaks, then 86.20 could be seen very quickly, and then 84.78 could be seen very swiftly after that, which would be taking us back to levels we haven't seen since the early part of 2017. So, again, bang on key support.
What's interesting there is you've got sort of a sideways consolidation, but the Bollinger Bands aren't coming together to suggest any explosive move out anytime soon, right?
Yeah, true enough. Yeah, you're absolutely spot on there. Sometimes if you are about to see a big explosive move, you do see a tightening of the bands, and there hasn't been too much evidence of that. But maybe, that actually, in my experience, that works better on daily time frames than weekly.
Understood. Okay, well, that's why you're qualified, and I used to be qualified. Clive, as always, thank you very much indeed for your time.
Pleasure, Nick. Thank you very much.